Good morning, America. Good afternoon from Germany. It is Thursday. Yeah, a lot of days have passed since my last live stream, and the earnings season began. So we had Microsoft earnings the day before yesterday and Tesla earnings yesterday after the close. And yeah, we will have a look at the market again today. So sorry that I wasn't able to go live in the previous days, but my kids are both sick and therefore I spent the time with them. And yeah, then stock exchange is on the second place. But today is time again to have a look at the prices. So let's go and see what happens today. We will switch here my screen. Let's see. So this is Nasdaq. Let's see it on a daily time. What happened in the previous days. And we see that we have a strong resistance here. We just went up to 12,010 points in Nasdaq right before the Microsoft earnings. So when the Microsoft earnings were out, the earnings were better than expected, a little bit better than expected. Then the prices went up. Microsoft was up about 3 or 4%, and Nasdaq went to 12,010 points. But then on the earnings conference, the prices went down again after hours. And on the next day, so yesterday, Wednesday, prices went down huge. You see here this huge drop, about more than 2.5%. I've seen it on a lower time frame, like 15 minutes. So we can better see this strong reversal yesterday. Here you see the earnings conference call. This is my time, midnight Wednesday. This was 6 p.m. Eastern time on Tuesday after the Microsoft earnings, and then we went down. Nothing happened during the Asian session, but during European session, you see here the opening of European markets here at 9 a.m. my time. This is 3 a.m. Eastern. Then we began to go down further. And when the US market opened 3:30 p.m. my time, 9:30 a.m. Eastern, we went down even more. And here you see half an hour after market opening, we found the bottom here. So we traded sideways for about 1 hour, as you can see. And then we managed to get back above moving averages, above VWAP. And then we had a 100% reversal. So at least 100% from the beginning levels here of the European session. And today we went back to the 12,000 level. We had highs pre-market of 12,003 points. I didn't expect this. This were really heavy moves on the earnings, so interesting to see, especially here this move, because you see this was a major support. We went sideways here for almost one trading day before the market opened, and we went just through this level just to trigger all stop losses, and then we went back up. So yeah, huge reversal here. I stepped in some short positions again, beginning at 11,900, 11,950. So I'm waiting for lower levels to come again. Let's see if it holds a second time the 12,000 level, or if we will push higher when the market opens. We will have GDP economic data in about 10 minutes. So let's talk about the economic news here today. In about 10 minutes, we will have core durable goods orders. So these are the monthly numbers here. Let's just go into and see what the forecast is. The forecast is negative, as you can see, minus 0.2%. And the previous ones were all positive, the forecasts. But we had already in October last year, we had the negative number of minus 0.5%. So maybe we will have the same this time, worse than expected number. And this can cause, of course, more fear of a recession. It's good in case of inflation, so less inflation risk. But as we go to CME FedWatch tool, we will have the Federal Reserve meeting in 6 days, next week. Then we see that the expectancy went to 99% for a 25 basis points rate hike. So almost everyone is expecting 25 basis points. You see these 0.2% for nothing. So it will probably not happen. But 99.8% expectancy for 25 basis points rate hike. And you see 1 month ago it was just 65. So now we are almost pretty sure that it's a normal interest rate step of 25 basis points from 4.5% to 4.75%. It's not the top, so the top will probably be at around 5%. As you can see here, the next meeting in March, we will probably see a further step up to 5 percentage points, and then the expectancy is that we will see two lower levels, 2 steps down at the end of the year in November and December. So this for now. So there's no fear of more inflation and therefore higher interest rates, not right now. And therefore it will not be important if we see higher numbers, but more important for the recession risk. So not for the inflation and the interest rate levels, but more for recession, because market fears inflation in recession. If it is a deeper recession than expected, so less GDP, this will also be important today, GDP, gross domestic product, then we will see that recession risks are bigger than expected, because the previous ones, we have this number every quarter, and here you see the previous ones were always better than expected. So there was a high growth of the US gross domestic product, and this time the forecast is 2.6%. It's lower than the previous two forecasts. But if we see especially a lot lower number than the forecast, then this will cause recession fears, and these recession fears will cause the prices to go down. Let's see if this happens, but if the number comes in better than expected like the previous times, then we can also see a rally to the upside. So let's prepare for everything. In about 7 minutes are the numbers, so let's go back to NASDAQ and later to ES for the S&P 500. Which are the important levels? Let's just redraw all our lines and just get rid of all these lines here. And here I will redraw the lines. Just go back and explain. I think you know my favorite technical instrument is Fibonacci, the low point here from January 6th to the high point here in December. This was December 13th. We had the high point of 12,330 points in March future of NASDAQ. This was the low point here on January 6th of 10,751 points. And now we are at 11,967 points. You see, this is a Fibonacci level. This is the reason why we struggle here to get higher. So this acts as a resistance. Of course, we tried to push higher several times, but then we went back again. Yesterday we opened there, but closed lower. And yeah, today, let's look where we will close today. It depends on the economic data and of course on the other, I will just bring it up, on the other earnings we will have today. We had pre-market American Airlines better than expected in case of revenue and earnings per share. MasterCard, JetBlue, Southwest was a lot worse than expected. You see they lost a lot of money, and revenue also was lower than expected. But more important will be after the market close, Intel, Visa, and so on. So the most important ones were Microsoft and Tesla this week, but we will have more next week. Next week on Monday we will have some technology stocks again, SoFi and NXP. On Tuesday we will have United Parcel Service, General Motors, Exxon, Pfizer. So these are the big ones, McDonald's. So this will be important before the market open on Tuesday. AMD, Snapchat, Electronic Arts. So next week will also be important. Yes and no. Microsoft is the biggest stock in S&P 500 and NASDAQ. Therefore, this was the one with the heaviest weight of the indices. But there are more news to come, and they will be important for the market overall. And especially not the outcome of the previous quarter, but the outlook for the next quarter will be important, especially because of this recession risk and recession fear. And if the outlook is bad, then probably we will see maybe a huge drop, I don't know, but we have seen what happened with Microsoft. This was a huge sell-off and a huge fear of worse than expected news, because here you see how far we went up on the news, about 5% from the closing to the high point after hours, and then we went down to the next day on the opening about 9%. So this was a heavy move, even if we recovered here and then closed about at the same level where we closed the day before. As if nothing happened. That's sometimes stock exchanges, but that has nothing to do with manipulation. It's just up and down. That's just normal, because sometimes people are stupid. They buy in too early and then they sell in fear, and this is why we have these waves at the stock exchanges. Sometimes over exaggeration, and then the same thing to the downside happens. And yesterday with Tesla it was a little bit different, because yesterday, I will just bring here the stock chart. Oops. Yesterday, just on a 50-minute base, yesterday almost nothing happened. As you can see here, we went higher, we went lower, and then just nothing happened. But then on the conference call, we had a rally, because Elon Musk was really he was good this time. He had good answers for the questions, and the market liked his answers. And yeah, the stock rallied, and now we are at $155 right now. I shorted some stocks. You can see here my mean price is $151, so I'm in the red a little bit, but it's only a small position here, and I can still go in with more. Of course, it is a high risk trade, because you see it's a strong uptrend here. I just wanted to trade the reversal at the $150 level, because I think in most of the times we see a reversal right here after 50% correction, because this was the high point here, about $200. Then the low point was $100, so $150 is just in the middle. I don't know if it will drop on market open, probably not. Maybe we'll see more buyers stepping in. So next level to the upside will be $161. If we go above this level, then I will be out. And yeah, this will cause a $10 loss here. My target is $138. This is the low point here of the previous candle, as you can see, and this is this Fibonacci level here. So this would be a $13 profit here to the downside if we reach it, and if not, then I will have lost $10 per share, but it's only a small position of 10k US dollar, so not a huge position for me. Let's see what happens here, and then let's move on with ES, but in 1 minute we will have the news already, so maybe let's move to the news and see what happens in 1 minute with the market. Let's bring up NASDAQ, because I trade NASDAQ, and then we can later talk about ES future here. So here the news and the chart. Let's see both together. We still have some seconds left, 30 seconds left. 11,980 right now. Core durable goods and GDP, these two are important. Initial jobless claims, yes, weekly number, not really important. And new home sales half an hour after the market opens, so still some time until we see these numbers. But yeah, it will be more interesting in the next 2 to 3 weeks, these initial jobless claims numbers, but because probably we will see if there is a recession and if the initial jobless claims will rise. For now, you see still a good job market, but we see core durable goods almost in line like the forecast, a little bit negative, but GDP is higher than expected. Interesting to see. So no recession risk, but market went down. Crazy. Okay, what else do we have here? Core durable goods orders are really high, so this is not a recession risk at all here. And what else do we have? Core orders non-defense, like expected here, but the job market is still high, so not a high number of initial jobless claims, a lot lower than expected. This causes, of course, some risk for the Federal Reserve, because they want to bring down the inflation, and this can, of course, cause some inflation fears here. I don't know why the market is dropping so fast, because these numbers seem to be good overall. GDP price index, yes, is a little bit higher than expected. This is just normal. A little bit inflation risk here, but as we have already seen, the expectancy is almost 99% for these 25 basis points. You see now 1.1% for no interest rate hike at all, so it changes from time to time, but I think these numbers are good. So no need for a market drop. It's not really bullish, it's almost in line, but yeah, let's see what happens here. It's recovering already. No bad data here from the economy right now. It will be interesting to see in the next quarter if we really can manage to have this soft landing like Jerome Powell is expecting. I still don't think that we will have this soft landing. I think we will have a worse than expected recession, but we cannot see it right now in the numbers. Inventory is low, lower than expected, also a good number for the market. So yeah, no risk here. Normally market should buy higher, but you know, this is an important psychological level, 12,000. Nobody wants to buy above this level. But when it breaks, then we will probably see a huge rally, because a lot of stop losses are probably placed right above this 12,000 level in the futures. And you see again Fibonacci level. So we closed above the Fibonacci level even on a 1 minute chart. So Fibonacci is significant. It has importance here on the higher time frames. You could also use some on lower time frames, like here on just these 4 or 5 day move. So I use this now for several weeks, but it's still in place. As long as we trade in between the high and low point, you can still use these Fibonacci levels. But what you can also do is just get rid of this and then say, okay, this was a low point here and this was a high point here. So let's see how far we can drop back within this area here. And then you have also Fibonacci levels. And you see yesterday we managed to close above this Fibonacci level. This previous one was a high point and this one was a closing level. So these Fibonacci levels also have significance. And you can also use these levels for having a little bit more target points. Yeah, if you want to trade on lower time frames, like within a day as a day trader, then you can also use these Fibonacci levels for your trading. Especially here you see previous high point. This is near the 9 EMA level. The purple line here is the 9 EMA on my chart here. And this one can be important, 11,744 points. Previous high point here was 11,759. So this will probably be important, especially because the 9 EMA level is here. But as you can see, like yesterday, we can drop lower and then see a recovery and close above. So everything is possible here with this market. But for now, it's really looking like at stage 2 of a reversal. So of course, higher high point. This is a high point. This is a higher high point. This is a low point. This is a higher low point. This is a higher low point. But as soon as we drop below the previous low here, then this is a turn of direction. So for now, it's looking like a stage 2 of a reversal here, sideways phase, consolidation phase. And we are waiting for the drop below the previous lows to see phase 3, confirmation phase, when we see the reversal. But we have to wait for lower levels, and the numbers today from the economy are not really producing fear right now. There are no major earnings after hours, therefore I don't think that we need to drop today harsh, but like yesterday, everything is possible. Even if the numbers are already over, everything can happen fast when some stop loss orders are triggered and causing markets to go down, but the same thing can happen above the 12,000 level. So we have to be prepared for everything, which is the next important level on the upside. Of course, there's a high point here. We have one high point from December 14th. This is 12,070 points. So right above this 12,000 level, there's one more significant level. This is this one. And therefore, it is a really interesting level here, interesting area, because yeah, we will struggle a lot to get through this area when we try to push in here. But then if we manage to go through and we will see some stop losses from the bears here triggered, then we will probably see right away the 12,150 level, previous high points here, or even this high point here from December 13th. So this one here and this one here is our target zone. If we break through 12,060, then our target point is above 200 points higher, and this one we can see right away, because if these stop losses are taken out here, then probably we will see a strong rally to the upside to retest previous high points. I don't know if it will happen, but sometimes the bears are tested and we can see the same thing to the upside like we have seen to the downside here. And yeah, you have seen the economic data and it's not showing us weakness of US economy, and therefore it's just substantial right now that the market can still hold the levels here. Let's see what happens in the next days and weeks here with Nasdaq. Let's move on to ES future. Where's my ES chart? S&P 500 here. Let's see it on a day chart. Almost the same like Nasdaq, but a little bit stronger because we are above the Fibonacci level, so it's acting as a support level. As you can see, the previous 2 days we closed above. It's acting as a support, and we are making higher highs here. This was previous high point, and now we are already making higher highs. So S&P is looking a lot better than Nasdaq. It's stronger, but it can turn. Yeah, as you have seen yesterday, we retested the 20-day EMA level and then went back right away. So everything is possible. But the next target to the upside here would be 4,087 points. This is a previous high point from December 14th. 4,090 points. So this is an important level here. As you can see, 4,087, 4,090. This will be an important level for ES future, for the future of S&P 500. And then if we go higher than previous high points here, 4,142 points and 4,180 points, the previous high point from December 13th. To the downside, the important level will be 3,900. What is it? 3,983 points. This is the 50% Fibonacci level, and there's also the 20-day EMA level. So this will have a lot of significance to the downside here. And yeah, of course, the low point of yesterday, 3,963 points, because if we drop below this point, then the upwards pattern is broken and we will probably see more selling pressure to the downside. But for now, it's looking bullish for ES, for S&P 500. And back to Nasdaq. Yeah, the same here, 12,000 level is now tested. Economic data is supporting these up moves here. Then let's see crude oil. Crude oil today is moving higher, 1.6%, but we are still trading sideways. We are really having trouble to go above this 82 resistance area. As you can see, we had previous high points here, here, and here. And yeah, this is a broad area between about 82 to 83, and we are struggling to get above this area here. You'll see we tested several times, 1, 2, 3, 4, 5 days, if you count this one also, in this area, but we didn't manage to close within the area. So a strong resistance area here for crude oil. Let's see if we can push through, but for now it's not looking like we are getting into this area. But yeah, when the economic data is strong, then probably we will retest this area and maybe seeing higher level when the stock market is pushing Nasdaq above 12,000 or S&P 500 above 4,100 points. Wix is still low, almost no fear at 19.15 points. And natural gas, here we have natural gas future. Let's see this is the long run. Where's my, let's use Microsoft chart here. I want the March future because March is now the front contract month. Futures, where is it here? No, this is the wrong one. NG futures here. March is now front month, and we see again a huge drop today of 6% down to $2.73. And you see this weakness is now still in place. So yeah, the $3 level couldn't hold for long. More weakness to come. Probably we will see a retest of the $3 level within the next days, I think. So some pushes higher when the bears are taking their profits out, the retest of the $3 level, and then see a further fall. If we have not supporting news fundamental news for a higher natural gas price, then probably we'll see more dropping here. Russia has some problems with selling their natural gas. Their storages are almost full, and they are selling these news to the people for something good, because they say, yeah, we have no problems getting you through the winter with a warm house, because our storages are almost full. Yeah, but it's a negative news for the economy, because they are not able to sell their natural gas. So even for US natural gas, the prices are dropping right now. So Europe is managing to use less natural gas, and the demand is dropping, and therefore also the prices are dropping really fast, because we had high points of about $10 and now we are back at $2.70. So you see this is a 75% drop in just a little bit over a half a year, and this is just crazy what we have seen here. You can see these tremendous downturn here. So for the March future, it is $8, but back in, I think it was August, we had the $10 high point. And yeah, you just see, even if it's not 75%, it is 65% here from the high point. So it's just crazy how far natural gas prices dropped, even with the war in between Russia and Ukraine still in place, and a lot of tanks now being delivered from the US and Germany to Ukraine. Let's see what happens here, but natural gas is a wild beast, so everything can happen. Huge moves to the up and downside, but my expectancy is back to $3 level, and then this should be a resistance and some more push to the downside. Still weakness here. Euro US dollar, we see higher highs, so we pushed above 1.09, and the $1.10 level is near, so this is an important psychological level, and you see I have drawn a previous line here because we had supporting area here, but $1.10 will be an important psychological level. Let's see if we can reach it and then see what happens there. But for now, as long as the economic news are good and the markets are turning higher, then probably euro should be stronger than US dollar and also turning higher. Yeah, what else do we have here? Maybe you would want to have a look at Netflix. Netflix is still strong. Look at these previous 4 days, just crazy what happened after the earnings from last week. So we pushed higher from the lows to the highs here, about 17%, really crazy. Closed these huge gap pretty in a short amount of time. So from the low point here to the previous price level, we gained already 126%. Just crazy. Even if you have bought just in the previous months, you would have made a lot of money with Netflix. But the same with Tesla. So let's finish with Tesla here. I'm in my short position, and I still think that we should see a little bit of a downturn, not back to the $100 level, but minimum to the $140 maybe, and then to get in some more bulls. But yes, the news were bullish. Elon Musk was bullish, of course. And let's see for the analysts, because the outlook is more important than what the analysts think of the answers Elon Musk has given during the earnings call. And this will be more important for the stock market overall, when the analysts also are bullish and are giving higher price levels than lower price levels. My price target is 138 for my short, but I have a stop loss right above the $161 level here. This area should be a resistance, and if not, then I will be out of my short position. But it's still looking strong here. And you see, these are 50% in just a month, not even a month, because the low was on January 6th, where we had the low point of $101.20, and now we pushed above 150. So this is more than 50% in less than a month. Yeah, it's 53% right now. But as you can see here, also in a month, so just from December 1st to the low point here on December 28, we had a drop here of 47% in just a month. So now we have recovered the half of this downfall here, but there's still more room to the upside, of course. And yeah, you know, Tesla is like one of the biggest meme stocks, because there are a lot of Elon Musk and Tesla fans pulling out money from everywhere just to buy in Tesla right now. but as soon as they will take out some profits, then we can also see a huge and a fast drop to the downside. So let's prepare for this. Everything can happen here. It's just a small position for me, but I know that I'm trading against the trend, so the probability for having a winning trade is lower than 50% on this trade. Let's just see your questions here. Do we have cotton in futures? Yeah, of course, I can show you cotton prices. It's CT. Let's just bring cotton prices up here. CT. And then I will close out the live stream because I will have something to eat. So this is cotton March future. It's just trading sideways right now. As you can see, we have a resistance level here. This is a high point of about 0.90, and we have a low point here. So this is a sideways area, and as soon as we see the breakout, and it's looking like we probably see the breakout soon, because you see here higher low points, and this is the resistance here. As soon as we have the breakout above the 0.90 level, then probably we will see higher price levels here in cotton. But if not, or if we see a false breakout and fall back in this area, then we will have more sideways trading, as long as we don't break the low points here of about 0.80. And when we close at lower levels, so it's 0.79 10 about, then if we close at lower levels, then we probably see more sell-off here, and the target would be the low point here at 0.68. This is for cotton. Yeah, hope you could take some information here. If you have some questions, just write them down under the video, and I can answer them later or in the next live stream. I will go live in the next days when we have major economic news. Just see the next news for the next days, and then we will close out. Tomorrow, core PCE price index is important, and I will live stream these, so prepare to be live here about 1 hour and 15 minutes before the market opens. And next week we will see here some more news on CB consumer confidence on Tuesday, and on Wednesday ADP non-farm employment change, ISM manufacturing PMI half an hour after the market opened, and of course more earnings news. Non-farm payrolls first Friday of a month, like every Friday. This will cause a lot of movement like every first Friday of a month, and we will live stream these news together, of course. So I wish you a nice and hopefully happy trading day with a lot of gains for you, and let's meet tomorrow again 1 hour and 15 minutes before the market opens. Have a nice trading day. See you tomorrow. Goodbye.